Right, let me tell you about a fella who got himself in a right pickle with the revenue commissioners. It's one of those cases that's so Irish, you almost have to laugh. Except when you see the tax bill.
Ah, the revenue. You know, they're like priests, aren't they? Always watching, always judging, never forgetting.
And in this case, our man sinned spectacularly. Here's how it starts. Back in 99, the lad buys an apartment. By 02, he sells it and claims it was his primary residence. At first, everything's tickety-boo, but then after some mild pressure from revenue, he changes his tune, says, "Actually, I was living with Mammy and Daddy the whole time."
That's a bold start. You can't exactly split yourself between a flat and your parents' box room, can you?
Exactly. So, revenue takes their capital gains tax and probably assumes they'll never hear from him again. But fast forward a few years and he's back at it. Buys another property and sells it just 20 months later. Once again he says, "This is my main residence." But the revenue commissioners smell a rat.
Now, when the revenue smells a rat, they don't call the exterminator. They invite the rat to a very formal chat.
They sit him down, cup of tea in hand, and start with the big question. "Did you live there?" The lad says, "Of course I did." But revenue say the house didn't have a kitchen. To which he replies, "I didn't need one." Lived the entire time on takeaway, pizza to be precise.
Did he now? I've no doubt he was committed to the story. But you'd at least want a hob for frying an egg or boiling the kettle, wouldn't you? What if the takeaway was closed? So what happened next? Let me guess. He tried to talk his way out of it.
Oh, he did. And as you'd say, when you're explaining, you're losing. The revenue don't want your stories. They want your receipts. Revenue dig deeper. They notice his post was still going to his parents' house. They find a loan agreement describing him as, wait for it, engaged in a trade. They clock the 20-month ownership, barely enough time to let the paint dry. And then the pièce de résistance, the luxury renovations. We're talking a high-end fit-out, the kind of thing you'd see on Irish Tatler.
So the place was missing a kitchen, but it had chandeliers and marble countertops. If you're living off takeaway, you don't need a marble countertop to set the bag down.
The Appeals Commission put it all together and decided to apply what they call the Badges of Trade tests. Basically, they look at your behaviour and decide if you're flipping properties for profit. Short ownership? Check. Fancy upgrades? Check. Barely any utility bills? Big check. The Commission concludes, this wasn't a home, it was a trade.
And the bill?
A cool 350 grand, not including interest and penalties.
That's not a bill, that's a wrecking ball to the wallet.
And it didn't have to be that way. If the man had taken advice, prepared properly and, I don't know, added a kitchen, he wouldn't have been on the back foot. Instead, he strolled into the commission and started telling stories that wouldn't convince his mother, let alone a priest, or the revenue.
So what's the lesson? Besides the importance of kitchens?
The lesson is simple. Don't mess with the revenue. Get advice, plan ahead, and don't try to bluff your way through. At CoVenture Tax Consulting, we do just that. We read the rules, know the patterns, and make sure you're not left explaining yourself with a takeaway menu as your alibi.
Wise words. And as I always say, may your house have a kitchen, and may your taxes never come back to haunt you. Goodbye.